Remember, if you don't prioritize your life, someone else will. Greg McKeown. And that is a phenomenal lesson right there. Every single day, if you don't plug in the 10 to 15 minutes it takes to follow these charts with us every day, but to become a charting master, it'll never happen. Someone else's priority will take over. Maybe it's a spouse, maybe it's your kids, maybe it's your boss. Whatever it is, make the priority learning how to do this. Why? Imagine the power you would be given if you could read the future. Now, we don't call ourselves forecasters. We call ourselves trend followers. So what we do is we wait for a good trend to set up, such as the one on the screen right now, the S&P 500 that rotated over, going up back on the week ending the 1st of November. And what was the jumping in point? Somewhere around the close at $304. How high has it gone in a week and 2 days? As high as $309.99. So basically $310. So from somewhere in the neighborhood of 304 to 310. That's $6 in just a few days. Is that a decent practice trade for you? Absolutely. It's the power of the weekly vertical crossover. We talk about it time and time and time again. Why? Because it's different than trying to be a day trader, trying to find anomalies, inefficiencies in the marketplace. AI, computers, quant trading, all that is going to take that away at some point. The computers are going to be smarter than you. But what we are doing is following trends. Okay, my friends? Following trends. Does that make sense to you? If it doesn't, stay with us every day, 10 to 15 minutes. You hadn't purchased our book. I sent out a whole bunch of them today along with Trader's Journals. Now, let's jump into these charts. I've already told you what's going on. Had another up day for stocks. Bonds were up and gold. But let's look at stocks first. S&P 500 still heading up quite strongly. Derivative oscillators gaining momentum. We're still waiting. The high in the prior week was 309.65. The high this week, 309.99. That's good. We've hit a bit of a higher high. We like to see that. We want to see things continue to move up even stronger. This is just 2 days in now, just 2 days in to a 5-day candle. Remember, you never call a candle until it is drawn. 2-day chart shows us. Now, this latest 2-day chart is just the first day of the latest 2-day candle. The Monday ended the Friday Monday candle for the 11th. We saw that occur, and that was a green up candle, but not reaching a higher high. The high was 309.65 back on the candle ending Thursday the 7th, but we've gone up to 309.99, so we have gotten higher with this candle. That prior candle did not. We see a little bit of weakening as far. We would like to see everything stacked up on that trend line, so we fell a little below that. Not a big deal. Price percent oscillator still heading up. Derivative oscillators losing a little bit of energy right now. Why? Because we saw that dip back on the 2-day candle ending the 11th in higher highs. But we've made up for that now. So we'll continue to watch, see what there's. See, this is just first day of the latest 2-day candle. We'll see where that ends up. 4-hour chart, we had that sideways slide, but in the morning, we popped up above it. That was good to see. Ended the afternoon with a red open box spinning top, means indecision. Again, more up than down, but indecision. We see the price percent oscillator. This is the 4-hour chart heading down. Derivative oscillators losing downward momentum, so that's good to see. Again, things are looking fine. So we'll continue. We still have price movement well above, of course, the weekly and well above the 2-day also. Even on that 4-hour chart, we start seeing penetrations of trend lines. Those kinds of things, those are important to pay attention to. Oh, by the way, those of you who are Patreon members, don't forget, live Patreon call-in tomorrow, live Patreon call-in on Wednesday at noon Eastern Standard Time. Look at your emails. You will see the notice and the call-in number. If you're not a Patreon member, sign up tonight so you can be with us tomorrow. Okay, let's go ahead and keep pushing through these charts back to the weekly and those Patreon monthly question answer sessions, just intensive training that we do for our Patreon members as just a little bonus for helping support the work of the channel. Q's up for the day, 0.29%. We see the price percent oscillator still heading up, derivative oscillator gaining momentum. The high the prior week, 201.72. So far this week, 202.21. So that is good. And of course, we had that weekly vertical crossover back with a jumping in point somewhere around the last 193.80. So we'll just say 194, somewhere along there. And what's the highest high we've reached? 202.21. Is that okay? Going from 194, let's see, is that, yes, 194 to 202.21. Not a bad gain over the course of 2 weeks and 2 days, is it? Not bad at all in 12 days. Again, want you to practice with us. Practice to show yourself approved. Nobody said this was easy, but nobody said it was rocket science either. It's following trends once they get established. And special training for you guys who subscribe at chartingwealth.com for free. Go there, sign up. We have a great training for you tonight that teaches you cutting losses is the key to winning. What's that about? Listen to that video. Go to Charting Wealth, sign up. You'll get our daily reviews every day for free. So that's where we are on the weekly chart. Let's check out quickly on the Nasdaq 100 what's going on the 2-day chart. Reaching higher highs, price percent oscillator heading up, derivative oscillator losing a little momentum again from that bump down on the 2-day candle on the 11th. So that was representing Friday and Monday of this week, Friday of last week. That's what is causing some of that. But again, things are still heading up nicely. We'll see how that candle ends on Wednesday. And in the morning, we saw a bump up after the sideways slide on Tuesday morning and just sort of sideways in the afternoon. But again, up 0.29%. Good to see stocks still moving in the direction of the weekly vertical crossover. Now, one thing I have to point out to you guys, a little bit of a divergence here. We hit there was a high that we hit back in May, on May the 3rd. The high was 186. You notice that the price percent oscillator hit a higher high than it has now, even with a higher number in price. So that is a divergence. Price percent oscillator is not reaching as high as it had. Typically, what does that connotate? Some potential weakness. So again, go ahead, set those loss limits. Pay attention to those when this market turns around. You want to be ready if you haven't already taken your practice profits and gotten out of that trade. Now we're moving on to 20-year bonds up for the day, 0.46%. What do we see drawing as far as candles go? We see a down candle forming for the week, but it's not hitting a lower low. We talked about that yesterday. Price percent oscillator still heading down. Derivative oscillator about flat. And we go to the 2-day chart and we can see that a green up candle, now it's not an open box up candle, so it's not strong up movement. It's a cautionary down candle. We see that the price percent oscillator is about flat. Derivative oscillator flat. Price percent oscillator still heading down. Price is still below the weekly and the 2-day. So that's important to pay attention to those things. If you're still in that down move, we go to the 4-hour chart. Remember, our jumping in point was there on Tuesday, the 5th of November. Things are bottoming, so do pay attention. Maybe things will continue moving down tomorrow if you've not already taken the profits on your practice trade. Again, remember what we say, once you do your buy-in point, you watch on how strong your 2-day, how strong your weekly remain. And again, we're seeing a little bit of weakness on the 2-day, not weakness on the weekly, except for the fact that we're not hitting a lower low, which is bugging me. So again, we'll continue to watch, continue to pay attention to loss limits and the profit margins you've set. And if you've already hit those, then of course, why haven't you pulled the trigger, taken your win, and waited to again look for a potential jumping in point? Again, want you to practice all these things. And again, don't hesitate to practice, practice, practice. That's how you get good at this. Lastly, we go to gold. Gold already showing you a strong down week as far as the candle goes in the price percent oscillator, derivative oscillator gaining downward momentum. Gold was up for the day just a little bit, 0.27%. So again, well, not a lot, but more than maybe a little bit. But up for the day, 0.27%, a little over 0.25%. But that price percent oscillator still heading down strongly. Down move still looks strong on the weekly and the 2-day, hitting lower lows. And of course, we see the price percent oscillator moving down, derivative oscillator gaining downward momentum, prices well below the weekly and the 2-day. We go to that 4-hour. And that's where we see gold down some in the morning, recovering some in the afternoon. These are Heikin Ashi candlesticks. You've not taken that training, find it on the web. It's the most popular Heikin Ashi training you'll find, HEIKEN-ASHI. Supposed to mean average pace in Japanese, kind of candlesticks we use. You'll get a kick out of it. Derivative oscillator still losing downward momentum, has been since it peaked back on the 8th for down movement. And we see the price percent oscillator heading up. So just continue to watch gold, see if it's bottoming or just sort of gaining some energy for more down moves. Things tend to do that. Gold did that back on the 6th. Sort of slid sideways up a little bit for a day and then plunged again. And remember, our jumping in point was on the afternoon of the 5th of November. And if you had jumped in after that turnover, the last was around the 139.71 mark. Gold has gone all the way down, I guess, to a low here, 136.19. So that's about $3 in 4 days. Yeah, 5 days. So again, about a week. Not bad. Not bad at all. And again, we want you to practice these down moves as well as the up moves. Why? Because when you decide to get into options and start experimenting with those in your practice trading, you need to know how to trade inversely. Now, gold doesn't have a good inverse fund. TLT does, Qs does, and the S&P does. They have nice inverse funds. There's not a good inverse fund for gold. The reason I say that is because the bid and the ask are too far apart, which means it's not liquid, which is not good. We don't want to deal with anything that's not liquid. Although gold does have options, does have put options that we want you to practice trade. We've got a great training on options. Again, have that available to particularly our Patreon supporters. So again, want to become a Patreon supporter, we'll get that options training out to you. But here's the bottom line on options, my friends. If you cannot chart the market accurately, you got no business even practicing options at this point. I guess you could practice them, but you're putting the cart before the horse. First, practice trading. Practice just buying virtual shares of stock and seeing the direction they go in, and if you can track it and make it profitable. If you can do that time and time and time again, it's time to start thinking about options. If you can't master technical analysis, you're going to get your butt kicked in options. It's just that simple. So you have all these people that want to push you into options, options, options. That's the way to make money in the market. I'm telling you, you got to practice trade for a long time to figure out how the market works. You got to pick stocks you're interested in, and of course, follow with us every day our 4 ETFs, 2 big stock market indexes, the S&P 500, the Nasdaq 100, 20-year bonds, and gold. You can start mastering these things with us on a daily basis and do a couple of 3 good trades a month, practice trading. You're well on your way to figuring out what is really going on. But too many people think they have too much knowledge too quickly, particularly when the market's going up really strong. Everybody becomes a genius. Just remember, if you have a boat in the harbor and the tide comes in, you're not some magician because your boat floats higher. That's because the tide's coming in. That's what happens when a market is rising. where the real experts are and the guys that went through with us this summer through the month of October, and you had successful trades, you know what's going on. Now, we appreciate you being with us. If you hadn't purchased our book, you need to do so. See the link in the show notes. Also, in those same show notes, you will see trade worksheet, daily market worksheet, weekly market worksheet. You need to print those out. Free PDFs right there for you. Sign up at chartingwealth.com for our free daily review, where you get this review every single day, plus our special trainings, plus our once a week review and forecast. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.